Hello and welcome to the Business as Usual podcast, which is part of the Edify podcast network. This podcast series is a 5-part look at exam technique for the Edexcel A-level business specification. In the 5 parts of this series, we're going to look at the exams as a whole, each individual type of question, and including some ideas for structure and model answers. My name is Jack Goodrich and my usual co-host is Mike Sawyer. We're both teachers in schools in the UK. This series is just me, but Mike's going to be doing a similar series for Edexcel GCSE specification students and teachers soon. Let's get started. Welcome to the Business as Usual podcast series on exam technique for A-level business. This is part 5. Just a reminder, this podcast series is aimed at students of the Edexcel A-level in business. The podcast is generally aimed at students across all exam boards, A-level and GCSE, but because I teach Edexcel, the exam technique sections tend to focus specifically on that. This is the final part of a 5-part series, so if you haven't watched the other parts, I would recommend that you go through and watch the sections on 4 markers, 8 markers, 10 markers, and 12 markers, but in particular that first part, which was about the exams, paragraph structure, and the question. Understanding those is key to being able to answer any of the questions properly, and so I'd recommend that if you haven't seen that one at least, go and see that one first. This is available as a video on YouTube. It's also available on Spotify. I would recommend that you watch it as a video because that way you'll get the benefit of the PowerPoint slides and being able to see the answers as they're written. So the 20 marker, one of the most important questions on the paper because these 20 markers, there's 2 of them on every single paper, they're worth 40% of the total marks. So obviously have a huge impact on your final mark. They appear on all 3 papers. It's the final question of every section. So if you remember what we said at the start in the first part, the papers are split into 2 1-hour-long sections. Well, this 20 marker is the last 20 minutes of each of those sections. It's not too bad for timing. You do have to put quite a bit into it, but it's not too bad for timing. But all of these questions always look the same in that they always ask you to argue between 2 options and then recommend one of these options to the business. So it's the only evaluate prompt question on the papers. But reading the word evaluate isn't the most important part of the question. There's usually a second prompt in the question for you to link back to. You'll see this when I go through the question and also when I go through a model answer. So the 20 marker questions look something like this. Evaluate these 2 options and recommend which one would ... and that will link to the sort of the second prompt of the question. So the example that we're going to have a look at in this one is from the 2017 paper 3. And they usually start with like a little tagline before the question itself. So in this case, it says, in 2016, had it not been for the Competition and Markets Authority, Pure Gym may have been able to reach its target growth by taking over the gym group rather than LA Fitness. And then the question itself, this one starts with using the data in extracts G and H, which I'll come back to shortly. But it's that second part of the question that every 20 mark is going to look like. So evaluate these 2 options and recommend which company it would have been better for Pure Gym to take over to achieve its target growth. I'm going to talk a little bit in a second about the first part of this question and that using the data in extracts G and H bit. In terms of the structure, pretty straightforward and something you'd definitely be able to do within 20 minutes. Each paragraph for option 1, each paragraph for option 2, and then we need a significantly justified conclusion. I get my students to use a Disco M structure. So I've put those 2 little structures, those 2 mnemonics on the screen. So Peach, as a reminder, this is all covered in part 1, is point, effect, apply, circumstances, however. And then Disco M, which is covered in part 4, is decision, and then it depends on short, long-term, costs, other factors, most important point. And in this conclusion on a 20 marker, ideally what you want to do is you want to see more than one of those justifications. So make your decision, you have to have your decision, and then support it with probably 2 of those other parts of that Disco M. The last bit of the question says to achieve its growth target, and that's so important. That's that second prompt I was talking about. So you've got to look for this in any 20 marker and make sure that the points that you make are linked to that second prompt. So the question isn't just about what's better for Pure Gym in terms of like what makes Pure Gym the most profit potentially. It's what is going to be better for Pure Gym to take over, which are the 2 companies, in order to achieve their growth target. So you've got to be really clever about making sure that your points are linked to that growth target. That using the data in the extract, as I mentioned, that example is in the question that we're going to have a look at. In paper 3, there are no 4 markers. You'll be aware of this from the first part of this series where we talked about the structure of the different papers. typically what you would find is at least 10% of the marks on the paper come from quantitative skills, so your ability to understand numbers and do calculations and interpret graphs, etc. Well, that's usually in paper 1 and 2 found on the 4 markers through those calculate questions that we talked about in part 2. There's no 4 markers on this paper, and so as a result, one of the 20 markers is going to require you to use numbers. And the clue to which one that is where it starts with using the data in extract whatever. So in this case, it says using the data in extracts G and H, calculate appropriate accounting ratios. So it's telling you what to do. So in this case, you need to use accounting ratio calculations as part of your application. If you don't do that, you're not going to get high mark band 4 marks. You're not going to get anything over 16 marks. And realistically, it actually can save you quite a bit of time, because if you do these calculations correctly, that gives you your application. You just need to then put it in a sentence. As I mentioned, this is the question that we're going to have a look at in this example, so you'll be able to see how this works in practice. So these are the mark bands. So a level, obviously we're looking for a level 3 answer or above, ideally significantly into level 3. 10 out of 20 marks would be roughly sort of baseline for a C grade, and so as a result you need to be at least in level 3 if you want to achieve a C grade or higher. So we've got level 1, 1 to 4 marks, level 2, 5 to 8 marks, level 3, 9 to 14 marks, and then level 4, a really strong answer will get you into level 4, 15 to 20 marks. And so as you can see there, as I did with the other types of question, we've converted the descriptors into something that matches the paragraph structure that we're talking about here. So as you can see in that level 4, strong knowledge in the points that you've selected, a detailed consideration of the effect on the business and circumstances of the business, consistently linking it to application, through application to the business using the extract. It has to be a fully balanced assessment, so that's not just going to have an argument for one of the options. It's going to be both of the arguments, both of the options argued, and however points, leading to a supported judgment, which is going to be our conclusion, which is going to be presented and justified in detail. And that justified in detail bit, that's where that Disco M comes in. To look at that question that we talked about as an example, I've put some extracts on the screen there on the YouTube version of this. Pure Gym buys rival LA Fitness, and some information in extract G and H on their financial position. So you've got their statement of comprehensive income and you've got their statement of financial position, and you'd use those tables to do the calculations that you would then use in your answer. So what you've got here is you've got a section on the LA Fitness, which is extract F, and then extract G and H are on the gym group. There is one little bit of information that's in another extract that you would know if you were looking at the whole paper. I can't fit all of the extracts onto the screen, so I've put it in italics into the question. So their target growth, it mentions in one of the other extracts that their target growth is to reach 300 gyms by 2020. Obviously this was written in 2016 or 2017 for the 2017 paper. So that's the target that we're linking to. It says there, we've talked about that second prompt in the question. Which company would it have been better for Pure Gym to take over to achieve its target growth? So you can see easily now that the case studies are split in that way. So we've got extract F is going to be our for and against argument for LA Fitness, and extract G and H, the calculations that we do based on those figures are going to be the information that we're going to use for the gym group argument. I'm going to go through a model answer. I'm going to go through it in full. So I'm going to go through the calculations you can do. I'm going to go through the option 1. I'm going to go through option 2 and the conclusion. So it's going to be quite a long model answer. If you'd like to have a go at the question first, this is the point at which you would pause it, have a go, and then once you're ready to have a look at a model answer, then you can continue. So the calculations we can do 3 profitability calculations, a liquidity calculation, and a gearing calculation. You might want to, my advice would be do all the calculations you can do, because the information's been given to you for a reason. It's been given to you so that because you can use it to make a point. You don't necessarily have to use them all though, and in fact in my answer I don't use them all. You can calculate from this that the gross profit margin has increased by 0.5% from 97.7 to 98.2. You can see that the operating profit has dropped from 5.13% to minus 4.42%. That's because in 2015 the company makes an operating loss, which is obviously not a good sign off the bat. ROAS is 2014's was 2.25, 2015's was, again, obviously because they made a loss, that's going to be a negative as well, minus 2.3%. So we've already, there you can see that the gross profit margin figure is pretty good, but the operating profit and the ROAS figures have dropped significantly. So already we can start just by looking at those figures to figure out whether that's pro the gym group or against the gym group. Is that going to be part of our main point or however? In terms of liquidity, the current ratio is pretty poor and it's got slightly worse. So they've got pretty poor liquidity. Their gearing ratio has dropped significantly. So they've gone from 69.5% gearing, suggesting that 69.5% of their capital employed has come from loan capital. That's gone down to 7.82 in 2015. So that's potentially a good thing because it means that when you're taking over that company or merging with that company, they have less debt finance. So maybe I think that makes it more easy. I think that makes it easier for them to be able to get loans of their own. So those are the calculations we can use, but obviously just doing the calculations doesn't get you a huge amount of marks. Just doing the calculations would get you a maximum 4 marks if you got them all correct. If you just did the calculations and wrote a couple of sentences on the calculations, whether they're good or bad, then you can get up to 8 marks on that. So that's 8 easy marks, but you obviously need to put it into a full 20 marker structure, which can mean that sometimes these can be quite challenging in terms of timing because you've got to do these calculations and then write a 20 marker. So the advice is make sure those calculations are automatic so that you can do them and you've still got the time. You should be able to do these fairly quickly because you shouldn't have to think too much about what the equations are because you should know that by the time you get to the end of year 13 through your revision. I'll go with option 1 first. So option 1 is for Pure Gym, PG, to have taken over the gym group, TGG. You've noticed that I've put in brackets there abbreviations for the 2 names of the businesses. You can do this as long as you're clear about it so that it saves you time, obviously, rather than having to write them out every single time. The examiner will be fine with that. This would have helped Pure Gym to reach their growth target of 300 gyms by 2020, as it was a merger instead of the takeover, so is likely to have resulted in less initial costs. I'm going to continue with that point. I'm going to go further into it as well. Pure Gym and the gym group are direct competitors in the low-cost segment of the gym market, meaning the cost of transitioning the gym group gyms into Pure Gym gyms would likely be low. Additionally, if there were Pure Gym and the gym group gyms in the same area, some gyms could be sold off as a source of cash inflow. The gym group also has a very low gearing of 7.82%, which means Pure Gym is taking on less external debt in the merger. This and the lower costs would lead to Pure Gym being able to invest in growth more easily. That sort of fact that they haven't got a huge amount of loan capital already existing as debt suggests that they might find it easier to get further loans and debt capital so that they can use that to potentially expand. I need to argue against this option. However, in 2015, the gym group was not profitable. They made an operating loss of 2.7 million and their operating profit margin dropped from 5.13% to minus 4.42%, as well as their ROAS, which was minus 2.3%. So therefore, this could worsen Pure Gym's financial position, which might make expansion more difficult. So that's my argument for option 1. As you can see there, I've used the numbers and I've used them effectively. So, if the rest of my answer is good enough, I could potentially get them into those top mark bands. Option 2 is for Pure Gym to have taken over LA Fitness, which I'm going to abbreviate as LAF. This option would have been better for Pure Gym to achieve their growth target of 300 gyms by 2020, as the LA Fitness takeover immediately brings 43 clubs, that's from the case study, into Pure Gym, immediately moving Pure Gym closer to their target. Additionally, as LA Fitness is a more mid-market operator, this allows Pure Gym to enter a slightly different market and target a slightly different set of consumers, which might make future expansion easier if their brand is recognizable in the mid-market segment. So there's just a potential option there for them to potentially change their market positioning a little bit because of the fact that they've taken over a company that is mid-market and has mid-market facilities. However, as the market segment LA Fitness operate in is different to the market that PG operate in, refurbishing these gyms will cost 20 million, that's from the case study, which is in addition to the initial takeover cost of between 60 to 80 million. So this outlay might impact on Pure Gym's financial ability to further expand, especially given that even with those 43 gyms, they're still some way short of their target. So all of the points that I've made are linked to their ability to achieve their growth target. They're always linked to the expansion potential of Pure Gym. And that's where reading the questions is really, really important. So I've talked here about how it's going to bring in more gyms. So obviously they're going to get close to that target. There's the potential for them to operate into a new market. But then I'm bringing that down. I'm making a however to that by saying it's costing them a lot of money. And so as a result, if it's costing them a lot of money, that might impact on their ability to further spend in terms of expansion. I also need a conclusion. In conclusion, taking over the gym group is the decision that would have been better for Pure Gym to achieve its growth target. As Pure Gym and the gym group are in similar parts of the gym market, the costs of this merger and refurbishment will be significantly lower, leading to more capital being readily available for further expansion. In the short term, saving money will allow for greater long-term growth potential. So it potentially could have gone into more detail on that last sentence, but I've used two parts of that Disco M structure. I've used a cost bit there, talking about how the costs are much, much lower. That's one of the reasons I've decided to go with this option. And I've also made a point of making a short-term, long-term mention there as well in my conclusion. So as I said, we want two, ideally, parts of that Disco M structure to make sure that our conclusion's justified effectively. Now, you don't have to agree. You might well have looked at LA Fitness and thought that was the best option. As long as you justify it, you can't be wrong on your conclusion, as long as you follow a structure in terms of as long as you justify it effectively. Thanks for watching. Hopefully that helps with 20 markers, and especially those ones that require a little bit of data. As ever, if you've got any questions, feel free to get in touch. You can subscribe on YouTube or follow us on Spotify by searching the Business as Usual podcast, and you can follow us on Twitter and Instagram at BusinessAUPod. Cheers.